What is an individual investment account and how can I use it? Coming up. Hey, welcome back. This is Kevin J. Pineau. Welcome to my channel. If you're new here, this series we're talking about investment accounts, 401ks, retirement accounts, and basic fundamental things simplified so it's easy to understand. A disclaimer, I'm not a financial professional. This is for entertainment purposes only. It's not to be taken as financial advice. If you want financial advice, talk to an actual licensed broker or financial advisor. But individual accounts is what we're talking about. I'm gonna jump to my screenshot here and show you some doodles of exactly how these work and how you can use them. All right, just like we've seen in all of our other videos, remember this is a series, so I'll leave a card up there in the upper right so you can get back to the beginning, but there's a brokerage house that holds your little bucket, your account, and this account is an individual account. You can own stocks, bonds, mutual funds, ETFs, all that stuff. You work, you make money, put money in the bucket, market goes up and down, in the future you sell it for more money. Simple, right? Well, these are tax different. Oh, don't forget to subscribe because I'm going to go over stocks, bonds, mutual funds, and all that stuff in a later series. Okay, so an individual account gives you the ability to buy and sell daily. You can buy once a year, you could sell once a year, you could never sell, you could do it day in and day out. You can buy and hold, or you can trade, but there's tax implications for this account. It's not like an IRA or a 401k. It's different, all right? You don't take money out of your paycheck every week. You could put a lump sum in, like an IRA, but you get to trade and tax different. So if you're trading, you're taxed at current tax rates. Current tax rate is taxed like your paycheck. So you get taxed the same rate you would be taxed if you were just earning that income. All right. If you buy and hold, which means you're taxed at capital gains rates, which is a different fixed rate. It doesn't fluctuate like a regular rate. Oh yeah, if you like that, hit the like button. So capital gains rate is tax changes after 1 year and 1 day, and it's a lower rate. I think it's like 15 or 20%, and it's fixed no matter how much money it is. The one difference between this account, is you're taxed on your current, your interest and dividends. All right, and we'll talk about those, what those are if you don't understand what they are in a future series of videos. But yeah, whatever you make from bonds or dividends from stocks, you'll be taxed at a specific rate this year. So we'll talk about that later. But if you're buying something like index funds that don't trade a lot and reinvest the dividends, you won't have a large tax bill. So hit the subscribe button, that little box in the corner right there. And we'll draw another line, another arrow right there if you're new, and we'll catch up later. Okay, so that's an individual account. A lot more freedom with these, a lot more things you can do. You can buy mutual funds, you can buy stocks, bonds, ETFs, all sorts of different things. You're essentially open to the entire market in one of these accounts. The taxes are a bit different. You can trade in and trade out very frequently. You can use it for pretty much anything. There's no penalty for taking it out early at any time. You can literally buy something today at 10 o'clock and sell it at 10:01 and that's it. You're in and out very quickly. Or you can have someone manage it for you or buy a portfolio that's pretty much pre-built into a certain asset allocation. In the next video, we're going to talk about rolling over your accounts. Let's say you quit your job and what to do with it. Coming up, click the card or the thing right there. That's the one. Click that one. Next video.